Good afternoon. It's Quant Trade Edge, and this is the end of day wrap up for Tuesday, March 29th, 2022. One of the biggest things that we had on our list yesterday was the Russell, and it completely snuck under my nose. We have this A, B, C pattern and a good setup bar. The setup bar being, having a long lower tail and closing very close to the high of the day. And if you remember in the Australian dollar, when we had a similar A, B, C, we got a very big move out of it on the daily. And I actually like the tighter pattern where you're going from down to up to down to up in consecutive bars. And I think that is a level of compression that gives you more power to come out of the position. Like if you notice here, the size of this is greater than the size of this entire consolidation, whereas in the case of the Australian dollar, the first day was fine, but, it really took 2, 3, 4, 5 days to really make up for the size of the consolidation. So I saw this violate, and then, sorry, let's go back to the Taylor real quick. There was also just a nice divergence forming here between these, parts of the pattern. So that gives it another extra bit of oomph. So we took out the high at 8:35 p.m. and I saw that happen. And I just thought to myself that there's no way that whatever sets up, by 9:30 is going to hold all night long. And I was completely wrong. We got the most perfect setup here. I'll blow it up so you can see the bars. Down, up, down, and this bar itself was a hoagie right here. We had 1, 2, 3, 4 bars closed within that hoagie. And if we look across to the rest of the night, we did not take out that low. We got close at 10:50 p.m., we got close at 1:40 a.m., we got close at 2:10 a.m., but then in European hours, we were already off to the races. And now the screen is going to look very scrunched because to show you the asymmetry that we got from that risk bar, take the volume off, that risk bar was so small that we got 35 times that risk to the high. So there was plenty of room anywhere along here for whatever reason to take profits at many multiples of your risk if you caught that overnight and stayed with it. I didn't, so on to the next. I was actually enamored with copper. So copper, going into yesterday, also had a good pattern. We had a PF3 down on this day, ROC flipped up on this day, so for Taylor, this is the best day you'd want to buy. It didn't have the two-legged pullback like the Russell did. It was just kind of your average flip. And copper is something that I accept that it breaks out earlier, in Asian hours because a lot of copper is traded between Australia and China. So that's just the most active market that trades it. So yesterday, we broke through that high at 8 p.m., right on the Asian Open. And then we got a very controlled pullback. One leg down, one leg up, one leg down. I'll blow it up again so you can see the granularity of the bars. Down, up, down. I guess in theory these are also up bars because this was inside, this was outside. So you could draw this from here to here. I'm just drawing it to the highest price of the swing. And then you did get an inside bar right here. And, everything is structurally fine with this. The inside bar held all day long, the bottom of that stop, and we ended up getting about 2R on that trade. But I want to go into a deeper nuance here, and that is in the morning, from the time we entered this trade, which would have been around this bar here, so around 4:20 in the morning, we had good profits leading up to 6:45, 7 in the morning, about 2R. And then all of a sudden we had this puke right here, and this is the 710 bar. That is considered the pit open for copper. And whenever you have this opening times, just like this 8 p.m. Opening time for Asia, there tends to be an extreme move and then a flush. And here it's the same thing. We had, the flush came in the other direction, and you can also tell it's a pit open by looking at the volume, and you'll notice that the volume would spike up for that moment in time relative to the time just before it. So yeah, this is that moment in time. Everything leading up to it was about 60% or less, half or less of that volume that we saw in that one bar. So recognizing that this is just an opening shakeout, and taking it down even further to say a 3-minute, remember what we saw on the NASDAQ the other day when we had that violent move down and we didn't get shaken out because it came in one leg. This absolute low of this move is 470.35. It came in one leg, which is a liquidation flush, which means the real trend is in the other direction. And being long from the system breakout and having nice profits and then giving them back, I decided to add in here. And, since I had a friend that I chat with that wasn't already saddled with a position that had given back his gains, I was just letting him know that I thought it was a very good risk-reward spot. And, so I don't know if you can see this from, if this is big enough. But it just says, I think, very low risk spot to buy copper. I added 470.50 with 469.75 stop. Of course, copper can give you slippage when it goes through stops. Your stop could probably even be 470.20, but I like to give it a little room. And I'll show you the room that I gave it here. Rather than be right under this pattern itself, I want it to be under the original entry pattern, just in case we had a little extra move down there, but turns out I didn't need it. But what that did do is that allowed me to, when I got 4R on the risk that I took for one risk unit, I took that off. And then the rest of it, just somewhere in the end of the day, I didn't want to hold it overnight, so I got my 2R on that other piece. This bottom comment, I need comments from you guys. So, I was excited when this finally popped up and I was out of the woods. So I call it surgical precision. If I was ever going to write a book about this method, I would be wavering between two titles. One would be called Asymmetry, and one would be called Surgical Precision. So leave me a comment, please, and let me know which of those two titles you prefer. Just wonder if one is overwhelmingly better than the other. So that was copper. Took us for a ride, and this is just the way to continue to use all the tools, all the skills that we're building to manage your position. You could set it and forget it, and at the end of the day you got your 2R, or recognizing that, okay, this is the opening time for pit, this is a one-legged flush, which makes it a liquidation flush, and then, you can even tell when you're out of the woods, because on this 3-minute chart, you had an A, B, C, and then a down bar. So once you took this out, you had a 3-minute U-turn back in the direction of your bias. So that's just how we can continue to monitor the situation and improve on it over the set and forget method. Natural gas. This was one I pointed out in the early update. And if we go back to the Taylor on this was absolutely perfect. And that is because we basically had, this day that was a PF3 up, a pause, 2 PF3s up, and this was a price flip. So this basically did everything. This is the most perfect Taylor setup that you could ask for. You've got a good size red candle, bigger upper tail, 2 PF3s up and a price flip. So this would have been ripe for our strategy as well. And the first time it popped below previous day's low was right here at 2:45 a.m. during European hours. Now looking at a 15-minute chart, let me draw on the waves here. This was a down move from here. Okay, down, up. So this is not a hoagie. This one violated it. Down, up, down, up, down, up, down. So you can see that we didn't get an ABC anywhere. We just have one-legged pullbacks. Now this was a two-legged pullback, but this one stopped at 541.1, and this was 541.5. It wasn't even like a tick. It was 4 ticks lower. And then, boom, just like we saw in copper the other day, we got this spike out of nowhere. And, this is a hoagie. So, again, one leg down, one leg up, one leg down. If anything, this being one leg up could help you realize that it's a liquidation flush against the trend, and we did end up close to the lows of the day, but there was nothing tradable in here. And that was on the 15-minute. On the 5-minute, it was the same story because I was watching it in both time frames. And again, we got one, and we got a 2 legs down, 1, 2, 3 legs up. 2, nothing was particularly clean. And then we got this one spike out of nowhere, and even on the 5-minute, not just the 15, it's one leg, which again reeks of liquidation flush, in the other direction. So, that's just the way the cookie crumbles sometimes. There's no way to get in on that. We don't want to just short and cover, and granted that would have worked today, but without having a firm spot to risk against, we wouldn't be getting large multiples on our risk capital. So let's take a look at what's setting up for tomorrow. And the best thing that I have is gold. And one of the reasons is we have this trap here. When you peak below and come back up, it's got multiple names. It's called turtle soup. It's called 2B. It's basically just a trap. That's a really good setup. We've had 2 PF3s down. If we had a flip up first, that would be ideal. Maybe tomorrow we get an inside day, and then we have the perfect setup the day after. But I think the setup is good enough that I would take it if it set up today. And that's because we're closing close to the high. Although it's a red candle, it's a very small candle, and we have a long lower tail, and we have the trap. So those are enough things that make that good for me. Silver, is going to trade very similar to gold. It's got the same thing going on. But I'd never want to have 2 correlated trades like gold and silver, and I tend to pick gold because it's a little cleaner, less erratic movement, and better margin bang for your buck. The indices have already fired, so there's no Forex trade to be had on the indices. The Australian dollar, this is a good-looking setup, and that's because off of this entire move, it was all one leg to the upside, and this one bar is our first leg to the downside. So if we take out this high, that would be, that would have good potential. And looking at our Taylor count, we had a couple of days to the downside, and then today was a flip up. So we don't have the PF3s per se, but we have the flip. We have the rhythm, and this was on an extended run. An extended run is when you have something that Linda Raschke had termed when you have more than 7 or more closes above the 5-period simple moving average. It shows a persistency of trend. And let me take this trend out here, but you can see we had 1, 2, 3, 4, 5, 6, 7, 8 closes above, 1 close below. You typically, at the very least, get a retest back above. Could even be a whole nother leg. So Australian dollar is a good looking setup for tomorrow. Copper, there could be more upside, but the Forex trade is done on this because this was the day in which we had the, we had both the price flip, the very, near perfect Taylor, and we already took out the high. So that trade has passed. That's about it because, natural gas is not going to really be ripe. If anything, it could maybe test a little lower down to this 420 level, 419.9, 519.9, 520, but that's not a 4R trade. If anything, maybe it does that tomorrow, bounces a bit, and we get this ROC flip, and then the day after we could have a trade there. So the focus tonight is going to be on gold and the Australian dollar. So that's all I had for today. Please, drop a like, subscribe if you like this content, and do leave me a comment on the names. I'm really curious. Surgical precision or asymmetry. Thanks, and have a good evening.